And joining me for a closer look at what's played out on the market scene today is Jordan Toy from Legacy Family Wealth. Thank you so much for your time, Jordan. Let's actually start off there with that meeting that is currently taking place in London between the US and China. Are these talks even about tariffs at this point, or are they about other issues now?
I think that they largely will be about tariffs, certainly, but I think a specific focus of the US is going to be on rare earths at this meeting. So I don't think they're looking to solve the entire sort of problem and trade argument in this, single meeting, right? This is largely going to carry on for some time, and it's going to be incremental sort of gains. I think the key here that I've noticed, and something that I did quite a deep dive on recently, is China's sort of, and the US has accused them of doing so, is to sort of be very slow in allowing the export of the rare earths. And now, when you look at it, right, China accounts for, call it 60-70% of rare earth metals and that production globally, right? When it comes to the actual refining of those, they're sort of around 90%. So it's, I think, quite a key point of leverage that China has in this trade discussion, right? And I think it's likely a negotiating tactic that they've obviously used, that, you know, the US, they want something from the US wants something in return. And China, I think, has largely sort of dragged their feet on allowing these export licenses for these rare earths to come through, because a lot of these minerals are critical in sort of the automotive sector, defense. There's a number of sectors where it's absolutely critical. And in the past week or two, we saw sort of mostly European auto manufacturers sort of sounding the alarm on, you know, inventories are running short. We can't get more of these in. We're going to have to start shutting down production. So I think for the US, that's probably a key point that they're trying to hammer down and get sort of China to allow these exports to continue. But China's going to want something in return for that. So we'll see where it goes, but that's sort of my view and something I've been focusing specifically on in these discussions.
This is very interesting because it puts Xi Jinping on a kind of higher level, I guess you could say, against Donald Trump. So it's going to be quite interesting to see how the US responds to seeing that he could have an upper hand. Well, let's get into some of the company news that came out of the JSE, starting off with Telkom. Investors pretty chuffed about that. They released their annual results, and you just saw growth from the top to the bottom line. Also something quite interesting that a lot of people usually look at is that free cash flow. That's about 2.8 billion rand, and we saw that share price rocketing about, was it 9%? About 9% on the day. Are investors convinced about the stock at the moment that had struggled previously in the past?
Well, I think certainly the movement that we saw in the share price today, the market clearly rewarding these results handsomely, and pleasing to see any sort of local share doing that kind of performance in a single day. Having said that, one thing I looked at quite closely, I mean, the disposal of SwiftNet that you mentioned earlier, it's been on the go for quite some time, so it was likely that it was inevitable that it was going to boost their numbers in this year. You obviously mentioned the headline figure that excludes that, but I wanted to do a sort of, in the brief look we've had at their results, is, all right, what does the rest of the business look like minus sort of all the sort of gains that came out of that? And it was quite pleasing to see, you know, on the revenue front, revenue's largely sort of flat, 3.3 odd % up. But as you already mentioned, sort of EBITDA was up around 25%. So you're seeing quite good management inside the business, good cost control. So what I'm ultimately getting to is pleasing to see that the continuing operations, outside of sort of the one-off profit boost from SwiftNet, that, you know, the right things are clearly happening inside that business. Subscriber base was up around 13%, I believe, and, you know, it's not insignificant. However, the disposal of SwiftNet had a big impact, right? I think it was like 63% of the total profit figure. So what that was also the pleasing thing for me to see from that is that management declared that special dividend, right? I think a lot of management teams across different industries, different geographies, often can be guilty of sort of empire building when, you know, there's cash in the business. They're sort of looking, well, what are we going to do with this? Well, let's acquire this business, that business. I think we like to see management teams often returning that capital to shareholders, and that's exactly what we saw today with the special dividend. As you know, you, me, and each individual shareholder can decide where they would rather allocate that capital as opposed to the decision being made for them by the management team. So I think across the board, pretty pleasing results.
Yeah, that's a very interesting point that you make, that it's also quite important to see where management allocates that extra capital. A quick one before we get to your stock pick. Cap released an 11-month trading update, flagging significantly lower earnings because of challenging trading conditions, saying that they expect their bottom line to take a dip. We did see that stock plunging almost 11%. A sign of the times?
Certainly, I think management will probably agree with me on this. Pretty disappointing set of results, to be fair to them. Obviously, they list a number of conditions and factors that have played into that, but a business that has struggled. I mean, we're looking at a trading update of, as you mentioned, around 30% drop expected in earnings. We'll see what the actual numbers look like, but I mean, just looking at the share price over, you can look at it over just about any time period that you'd like. It's had a pretty tough run over sort of 5-year period and longer. So not the easiest environment to operate in. There's quite a number of very different businesses inside that broader industrial holdings group. I mean, you've got and I wanted to specifically mention this sort of MDF factory that they've built, which is basically a type of wood that's used in most kitchen cabinetry that you'll see in anybody's home. So you've got that aspect of the business, and they specifically mentioned, look, this facility is still in its ramp-up phase, and it is apparently ahead of schedule in terms of the capacity utilization there, but it obviously takes time to ramp up those any new facilities. So there's that, which will hopefully start to have a positive contribution. But I mean, you've got that aspect of the business, then you've got sort of like a sleep and mattress side of the business, and then you've got polymer manufacturing side. So very different businesses in this broader industrial group, but sort of across the board, each unique business largely facing different challenges, and we're seeing that in the results today, or in the trading update today.
And that share price extending those losses down 22% on the day. Well, let's quickly get to your stock pick. I think we have about 30 seconds. What are you choosing?
Hard to unpack one in 30 seconds, but just briefly, I'd like to speak about Alphabet or Google. Most people are very familiar with the business model. I think it's pretty clear that, if you view AI as a long-term growth theme, they are one of the few that will likely be a long-term beneficiary of that, alongside some of the other big tech names. That's less of an angle that I'd like to talk about today. That's obviously a huge growth engine, and they're in a good position to sort of monetize the vast amount of data they have there, right? Because you've got a huge amount of users in Gmail, Android devices, the Google Play Store, etc. So they've got this big moat in terms of the switching costs and the data that they can then feed into the AI systems. But if you forget about all of that, I think the YouTube side of the business is something that is very interesting to me, and I think we see it a lot with the younger generations that that is a lot of the media that they are consuming nowadays. It's not a case of watching sort of TV. It's you go watch, and a lot of these content producers on YouTube, it's become increasingly very professional type content coming out there. So huge advertising revenue potential there, I think, and there is obviously existing revenues. But I suppose the main risk to the business model is does search sort of die with large language models? And I think largely not, because you've got the ability to plug advertising in, provided you're a leader in the AI space, which is why Google's spending the money they're spending, because that is a key risk to the search side of the business is, do generations going forward start searching for information through large language models instead of Google search? All
right. Well, thank you so much for unpacking that for us. Really, really appreciate it, Jordan. That was Jordan Toy from Legacy Family Wealth.